On early Thursday, markets made extreme moves. Asian assets slumped to three-week lows because new housing policy in China disappointed investors. Gold notched to new all-time high. Bitcoin has jumped by 15% this week. The US dollar index surged to its highest price since August 2nd, while the euro fell to an 11-week low. What drivers lie behind these sharp price swings? What to expect for popular assets? Let's try to figure out. The euro-dollar pair is weighed down by several factors today. First, the single currency was hit by an unexpectedly significant slowdown in inflation in the UK. Let me remind you that the pound sterling accounts for almost 12% of the six-currency US dollar index. Besides, almost no one doubts that the European Central Bank will lower interest rates for the second meeting in a row for the first time in 13 years. The rate cut will be again by 25 basis points. So, the refinancing rate will be cut from a 3.65 to 3.40%. Moreover, analysts predict another similar decline in December. All these policy decisions have been already priced into the value of the single European currency, so the euro is doomed to sell-offs amid the ECB's dovish policy. In fact, the single currency has weakened so much recently that there is no doubt about its oversold condition. Therefore, after the European regulator's interest rate decision, we should not expect a significant drop in the euro-dollar pair. Moreover, the market is currently in desperate need of at least a local correction. Although the euro opened today consolidating between 1.0852 and 1.0870, it's possible that we could see a rise in the euro shortly after the ECB's policy decision. And in this scenario, the bulls may try to test the resistance area around 1.0905. However, the increased volatility might trigger not only growth but also a decline. Therefore, if the euro-dollar pair moves down, this could push the price towards support at 1.0845. By the way, not everything is set in stone regarding the euro's further decline. If Christine Lagarde admits that inflation targets have been reached, this would signal that further monetary policy easing is unlikely. Such a development is quite possible. The inflation data published today showed a decrease in the consumer prices in the Eurozone to 1.7% on a year, compared to initial estimates of 1.8% and 2.2% in August. The annual rate of consumer inflation slowed significantly in September, giving the euro some hope for the future. Meanwhile, the US dollar may receive a double boost from the Fed Reserve and the US presidential elections. This week, American voter sentiment has shifted toward Donald Trump. His tariff, tax, and immigration policies are viewed by the markets as inflationary. In other words, inflationary prospects are bullish for the US dollar, which is already growing due to the so-called Trump trade. The US dollar index, tracking the greenback's value against its six counterparts, is trading today between 103.40 and 103.70 points. Analysts assume that the Fed Reserve may have to halt interest rate cuts at the beginning of 2025, especially if the US economy and the labor market continue to show resilience. By the way, traders may react to the upcoming reports today. Data on initial jobless claims and retail sales figures. The number of first-time unemployment claims is expected to decrease last week. A figure below 258,000 would support the dollar's growth. At the same time, US retail sales are expected to come out below the previous figure of 2.1%, and this will be an argument in favor of the European currency. Meanwhile, the oil market continues to treat water. Brent crude is trading today within the range of $73.90 to $74.90 per barrel, with moderate gains. It seems that oil traders still cannot figure out what lies ahead in the near future. The situation is extremely tense as the threat of a broader military action in the Middle East remains very high, which could automatically jeopardize global energy supply chains. However, for now, these are just the threats, and the situation in the oil market remains unchanged. Interestingly, the state of affairs has been influenced by leading global media outlets. They have significantly reduced the coverage of Middle East events and creating the impression that nothing is happening there. And this has softened traders' fears and stabilized the market. Therefore, a further development will largely depend on the just information presented by the major media outlets. What about Russian currency? The ruble is also consolidating today. After the sharp jump that occurred on a Monday, dollar-ruble pair remains around the range of 96.60 to 97.40 rubles per dollar. Much will not depend on the supply of a currency in the market. If the currency supply doesn't change following the Bank of Russia's decision to raise the cost of operations, the market will likely attempt to return to the levels recorded earlier this week. However, investors need time to assess the situation, so the stagnation will probably last until the end of the week. And that's all for today. We continue follow developments in the financial markets. Subscribe to our channel and follow news with us. And see you soon.